Should I buy Coinbase? In this particular video, I'll be doing a stock analysis on Coinbase. I'll be briefly going over the company, giving the company highlights, how they make money for streams of income, the competitive advantage versus the risk that they face, as well as their financials. And last but not least, I'll be giving you my personal insight. And make sure you stay tuned to the end of the video so you can see whether I purchased Coinbase or not. But before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps YouTube know whether it's quality content and help my videos reach a broader audience. And by the way, if you're a big fan of finance and investing and you like catchy t-shirts like this one, investing is in my DNA, make sure you check out my store, Wall Street Stock Apparel, where I make new custom and investing t-shirts. Coinbase is a company that allows you to buy, sell, and store cryptocurrency. What's the big deal on Wall Street? It's pretty much the first crypto exchange that came to Wall Street, so it helps you get exposure to crypto even though you don't actually have to buy it. The overall mission of Coinbase is to create an open financial system that provides services for everyone. So here's the key highlights. Coinbase has 56 million verified users. They also manage 223 billion crypto assets. They offer services in almost 100 countries. And Coinbase produced 335 billion transactions quarterly, which is nice. And it's also good to mention 1/10 of the total crypto market cap is managed under Coinbase. Now let's go over how they make money or the streams of income. 90% of their income comes from transaction fees, where the other 10% comes from products and other services. Now this is a good thing to mention about it. So just know, since transaction fees is heavily a part of their revenue, the demand of crypto, especially Bitcoin and Ethereum, because that's where those are the two ones that most of the people end up trading. So it's good to know that the crypto market is heavily correlated to the earnings and revenue. And I'll provide charts up so you can see that as well. All right, so let's go over their competitive advantage. Their competitive advantage is kind of really two things: trust and easy to use. Since Coinbase has been around for a while, a lot of people trust it, especially institutions and corporations. They're really in compliant with the regulations and stuff like that. So that's pretty good. It's very easy to use. I know I bought my first cryptocurrency on Coinbase because that's just simply what I knew at the time, and it was very easy to use. So that is definitely a competitive advantage. Also, the fact that they never got hacked. As far as the risk, on the other hand, there is a long list of risks. It's highly correlated to crypto. So when crypto does well, they'll do well, because remember, 90% of their revenue comes from transaction fees. It's also good to mention that if they were to ever get hacked or something, this would be detrimental to the company. To keep in mind that commission-free trading is becoming more popular, especially with stocks, and I think it will transition over to the crypto market. So as far as coming up with other streams of income or generating revenue somewhere else, I think that is very important, and they have to adapt to it. If not, then the company will not do well. Another big thing that they have to face is government regulations. Whenever government makes laws or something that makes it difficult to buy or sell cryptocurrency, or don't give you an incentive to do it, that's also bad as well. And also, it's good to mention that other financial services are offering cryptocurrency and stuff, so it can be a very competitive market. So you have to watch out for their upcoming competitors. It's heavily correlated to the price of Bitcoin and Ethereum. So if Bitcoin and Ethereum struggle, the company, as of the state that it's in now, will struggle as well. Okay, so let's go over the financials now. Let's just jump straight into the revenue and the earnings. So for the revenue, in 2016, they produced 6 million. In 2017, they produced 927 million. In 2018, they produced 523 million. In 2019, they produced 483 million. In 2020, they produced $1.1 billion, and in 2021 alone, quarter one, they produced $1.8 billion. And we look at the earnings for 2016, they produced $380 million. 2017, they produced $380 million. In 2018, earnings was actually negative $55 million. In 2019, their earnings was also negative $30 million. In 2020, it was $322 million. And in 2021 alone, it's roughly 765 million. Good to mention, in 2008, that's when the the crypto market ended up crashing. So it shows us their earnings as well as 2019. It wasn't so well, but then crypto ended up picking up. So as you can see, their revenue and earnings has a direct correlation between crypto market and more specifically Ethereum and Bitcoin. As far as their financials look really good overall. They have a great balance sheet. Their assets cover their short-term and long-term liability. And overall, their financials is very well. They have a solid balance sheet. They have very little debt, high gross profit margin. As a matter of fact, to see more details, let's check out Simple Wall Street. Okay, so let's just look at Coinbase really quickly on Simply Wall Street. As you can see, the information is up to date until April 16th, which this is assuming at the price of $342. Now, as you can see, let's scroll down a bit to the validation perspective. The P/E ratio is 216 times earnings, but you also have to keep in perspective that this is a growth stock, and also you have to remember their earnings increased drastically from 2020 in 2021, because 2021 quarter was higher than 2020's years altogether. But I just wanted to give you, say this to, just have you think about it. So last year, for quarter one, they produced 785. So I was just looking at, if you kind of broadcast it out, let's just say they was able to do 7 million each quarter. That would put them at $2.8 billion, which then what makes their forward PE closer to around the 30 range. One could be kind of very misleading, and like I said, this is a growth stock. That's why you want to really put these in perspective. This, just by looking at you, I can tell this is completely wrong. It was probably some type of error here, so I'm not even going to cover that. As you can see, the P/E ratio, the industry is 24 times earning, while this company is 216. I already explained earlier why this could be a little misleading. And also, there's not a lot of companies out there to make a fair comparison. So I definitely just wanted to bring that out there. As you can see, the earnings per growth ratio is 8.1, which is considered a little high. I also thought this was kind of really interesting, that their price to book ratio is 25 times 9 compared to the US capital markets, which was 68.1. So I thought that was very interesting. That future growth, this is only by 4 analysts, in the next 1 to 3 years is 26.7. But from my personal knowledge, I feel like that is a fair assessment of the growth. As you can are the earnings and revenue, future growth, revenue in blue, earnings in green. Now, as you can see, the analysts project for 26% for earnings growth and 25% for revenue growth as well. So for future return on equity, it's not enough data. Of course, that's understood because this is relatively new. Their earnings, that's what I was telling you. The earnings from last year grew 143%. That is a lot right there. So as you can see, the revenue is in the blue. The revenue is in the blue, earnings is in the green, but look at the free cash flow. The free cash flow looks amazing. Now, in regards to return on assets versus the company versus the industry, industries is higher, but like I said, these numbers for this particular case is kind of misleading. It's not a fair comparison. As you can see, we're looking at the financial health. The assets cover the short-term and long-term liability. That's really good. And also, you can see the red is the amount of debt, the green is the amount of cash, and the blue is the amount of equity. They have very little debt, a lot of cash, and a lot of equity. So that's always good to see. But the only thing that's very interesting, there's a lot of inside trading volume. So the thing about this, you want to keep an eye on this. It could just be simply because there has a lot of early investors, cashing out on the amount of money they end up having, especially even the CEO and stuff. They were selling a lot of shares. It could suggest that they think the company is overvalued, but it just could be simply them just end up taking profit, because when they pretty much bought it, they end up making millions of dollars. As you can see, I'll show that up on the screen. The general public's 57 cents, inside investors 23%, venture capitalists 13%, the public companies 0.7, and institutions 5.4. Now, I just wanted to give you a heads up. When I bought Coinbase, it was $320, so I bought it at a little cheaper price than what it is now. I normally buy small amounts, but in a nutshell, if you think the crypto market is going to do really well, I think Coinbase wouldn't be bad as a long-term play. But just let you know, the the way the company is currently, it's heavily based on transaction fees regarding to crypto. So I think you want to just keep in mind, once again, I bought it at 320, a very small position, especially with new growth companies, high growth, because of the hype and all that stuff. I just normally just buy small positions over a course of time, and then so especially for companies like this, once again, I said I bought at 320. I buy very small positions because with all the hype and stuff, I don't want to get overwhelmed. I don't want to really put too much on it while the hype is there. So I like to buy small positions here and there with these high growth. So that's normally how I handle it. That concludes this video. If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to my channel. Also, if you would like me to talk about a finance or investing topic, make sure you drop it in the comments below and I'll surely do a video on it.